right. Let's talk crop marketing here. We're 10 minutes in, 12 minutes in. Let's talk crop marketing now. I've got my list of 10 things. And I'll just start off with folks. It's been busy. It's been, I just think of even today, the stuff that we were working on today with some of the clients and with the Lunchbox crew. There's a lot going on here. It's been busy. I feel like I know that, maybe wheat sales generally are shy, but other than that, I feel like in a pretty good position ahead of harvest lows, if we want to call it that. So it's been busy. I think that what makes it busy is that, you are seeking these little victories and you're making a bunch of maybe tinier decisions that you are looking for that to lead to some positivity on the balance sheet, some positivity in your cash flow, some positivity in your margins. And so it's not as easy as being in a bullish market where, you just wait and wait and wait, or being in a straight bearish market where you just sell as fast as you can and get ahead of this thing. It just hasn't been that easy here the last number of months. It's been lots of small decisions adding up here and just takes more time, takes more energy. And you just have to be on top of it a bit more. So I'm going to put my foot in my mouth here right off the start. Again, I got about 10 here, so we'll call this number 1. But I took a screenshot as well. We have a wheat contract for $8.42 a bushel. All right. Now, 5, 6, 8 years ago, I would have took that screenshot, put it on X and said, hey, look at this $8.42 wheat contract. 4 people would have responded, where did you get that? That's baloney. And I would have had to explain it and whatever. Now, I have $8.42 wheat. I have farms I work with that have north of $9 wheat. $9.08 is one that I wrote down here. Hard red spring wheat. We have CPS wheat in the high 8s. And, the reason I'm saying I'm putting my foot in my mouth is those contracts aren't big enough. They aren't big enough. You sit there and you look at them and say, well, it's going to be my high of the year, right? In crop marketing, you have a high and a low. You have a contract that's the best and one that's the worst every single year. And I can just sit here and say, well, those are, not far from $2 a bushel better than posted bids. I'm going to chalk those up as probably the highs that I'm going to see for the 2025 wheat crop. But the reason that I brought it up is that I've talked about this on the pod the last couple of weeks, but there's carry in this wheat market. Futures are paying you to store it, and that carry goes into next year, into next fall, you're going to grow another crop before that, before that month expires. So there's carry here. And what I want to highlight to people in conversation is that the market gives you these opportunities and you have to, consider them. Like for example, and this happened back in the day as well, but the problem with these contracts is that we could only accomplish this in a few spots. We could accomplish this at our 842 contracts at G3. The 908 is at G3. G3, Patterson couldn't really get this done at Viterra because these futures were locked in May and June of last year, right? A long time ago, over a year ago is when these futures were locked in. Where else did we do these at? G3, Patterson. You could have done this with Cargill as well. And so the reason it comes up, I want to bring it up in conversation is that, if you looked at next year, and this is not a recommendation on that I want you to take today from me. But if you take spring wheat, for example, and you look from September to September, we're talking about 75 cents of carry, 75 cents a bushel. If someone offered you 75 cents a bushel more today for your wheat that you haven't sold yet, that you're about to harvest, you'd be taking that, right? And so, when I look at the 645 September futures, the 660 December 2026 futures, that's $8 wheat in Alberta, spring wheat, maybe a little bit better. You don't know what basis is going to do, but that's the path of something around that. which means in Saskatchewan, I'm going to be at around a 750. Now, my fertilizer costs looks like they're going up. We're going to try to hold them as close to the same as possible, but they're probably going up 5%. Right. So at 750 in Saskatchewan, when we have had years where we're just not getting the yields, not getting the weather to get the yields we need, it's really, really hard to go and forward contract that. That's been one of the problems this year. All right. But that doesn't mean that there won't be an opportunity here over the next couple of weeks. In fact, we already have some wheat contracted for next year. If I'm speaking truthfully here, we do have something done. We have done some stuff for next year already. And that looks like it's going to line up to be in the mid 8s in Alberta and low 8s in Saskatchewan. But, you go back here, July 10th, July 3rd, July 10th. I think we're trading around 690. You add 30, 40 cents to this, and there may be a path for you to get some contracting done. So my final point here on this one is that you have to look. You have to be a little bit more creative here. And if there's something that lines up in the future to do some contracting, then there you go. I'll tell you, for me, not today on August 6th, but I've been a bit more aggressive for next year. Going back a couple of weeks here, going back a month or so, been a little bit more aggressive than I was for the 25 crop. We'll see. We'll see if that pays off. But again, many different ways to manage this, and I'm trying to build the baseline price. So anyways, we'll leave it at that for now. All right. So I know that this is number 2. All right. I know that when you look at wheat marketing and everybody you talk to is in the same boat as you, I guarantee you that there's somebody out there that's been a bit more aggressive. In fact, I talked to a farm today that I do some work with, and we were reviewing percent solds, and they were north of 50% sold on wheat, which is awesome. So it exists. But generally speaking, we're all in this together when you talk about wheat marketing. And I looked at some of the big popular analysts out there as well across the prairies, and there's just not a lot done. Just not a lot done from them, not a lot done from farmers, and the buyers have nothing bought. The problem I have with this, the concern I have, is that, and I was asked this question this week, if I have to pick between canola and wheat and I need to market something for cash flow, do I market my canola? Or what should I market? Was the question out of those two. Before this little sell-off, canola was the answer. You're closer to the high of the market. You could sell at a profit. In this scenario, they could sell at a decent profit. It's the one that made sense. That's what we're going to do across the prairies. We're going to try to sell some peas and some lentils. We're going to try to sell some malt barley. We're going to try to sell crops that we are looking at break evens or maybe some profit and get those sold first. We're all going to sit on our wheat. I listened to a respected broker I respect today just talking about their conversations with farmers of everyone storing wheat. And wheat marketing in the winter, say last year's a little bit of an exception. It's not that fun. Like, it is not that fun looking for a wheat futures rally in the wintertime when there's just not a lot of wheat grown during that time. Like, there's always a wheat crop being harvested, but it's Russia, it's Ukraine. Those, when those crops are growing, like, okay, maybe we get a little winter wheat planting action here, some concerns there. But, like, during the month of October, November, December, January, February, like, it is tough wheat marketing. You guys know this. This isn't new. And so now I'm going to tell you that we're all going to put our wheat in the bins and we're all going to try to market our wheat at the same time this winter. This doesn't work. This doesn't work unless a demand story presents itself that just shocks us and comes out of nowhere, I guess, to move this market in a big way. Like, and I'm with you, folks. I'm with you. Like, we had our farm meeting yesterday, and what was the wheat price we're looking at? 665 or something like that. Like, yeah. There's not much going on there. But I want to say, if we're all in this together and you're all going to bin your wheat, I'm not expecting any miracles here from a price perspective. Okay. you're going to have to string together multiple decisions here to build your wheat price. This is for those of you that have nothing sold on August 6th. Looking forward, like you're going to have to make multiple decisions here, multiple moves, multiple strategies to build a price. And that might involve things like selling futures or buying puts or looking to add 25 cents on a play that, where futures are dropping, or maybe we are going to have rallies, folks. I'm not saying we're not, but we're going to have rallies, but we're trying to piece together these little 25-cent moves to build a decent price. All right. And if we're all putting it in the bin, folks, oh man, yeah, it just doesn't turn out. It does not turn out that well. So my number 3 is basis. Basis contract. Do I put things on a basis contract? I believe basis is going to have a little pop here. I believe it's already been happening. A little pop, a little gain, and it's that little gain that's to get those first trains filled. It's the buyers saying, "Hey, we're going to try to get something done here, get something on the books." One farm I was working with here this week, we were dealing with Bungie Viterra, and they came with a wheat offer that made sense for that farm to move wheat in the fall here off combine. So there's some negotiation there happening. So that pop is already there. It's already coming in for some of you. And then if the wheat crop is looking pretty good or looking, quite strong, then that's going to fade away. And so I'm not bullish. I'm not really bullish basis after this little pop here in the next days or maybe weeks for some of you. After that, we'll see. We'll see what happens with harvest. We'll see what happens with yield. But I would expect some wheat to make it to market here and pressure basis a little bit more. I also, from a currency perspective, I don't look at the Canadian dollar in the sense of a big downward trend here to help us export. I don't know. I don't see that either. So I think basis has a quick pop, then I think it relaxes, and I just am not confident that we'll see huge base gains until later on in the spring or if we have a really wonky harvest. All right. So my point here is basis, quick pop in wheat now, not later, not at harvest time, but now instead. Now you may sit here and say, well, Ryan, if we all throw it in the bin, then they have no choice but to improve basis. Well, yeah, maybe. All right. Number 4 here is just about weather. And I don't want to talk about this one. Oh man. The one thing that could have an impact on wheat here is weather. And what I mean by that is it's been a minute since we've had a really strange grade pattern. And there's one broker, I was reading their update today, and their updates are phenomenal. They're very good. But today was all about harvest weather and quality concerns. And it was like Durham, quality concern, fusarium, lentils, quality concern, bleaching, green peas, bleaching. I think there was a mold discussion somewhere in there. Like it was all this like wet. And I get it. Some of you have received, well, yeah, like a crazy amount of moisture here this week and more coming. The long range weather forecast into August 20th is quite wet, which is very good for the north where the fires are up north. It's very good for next year's crop. I don't think there's a lot of benefits anymore for this year's crop. And I know in our farm meeting yesterday, my brother was like, the drying system, they've spent a lot of time and energy in that over the last 5 years, and they're ready to use it. My brother said it's ready to rock and roll, and he's made some improvements this year, so he's looking forward to it. So we use our dryer every year, but this year I just wonder if we might use it a bit more. We'll see. So the weather could have an impact to grade spreads, and that's where I could sit here and say, hey, maybe there are some premiums for some number 2 wheat if we have a bunch of number 3 hard red out there. Maybe there are some premiums for some higher protein. Like at this point, prices are so terrible. If you don't need the space, then I could say the argument not to do anything right now is to just see how harvest plays out. And maybe the long range forecast is total baloney. Maybe that rain isn't coming and we have a beautiful fall and beautiful harvest weather. But if we get wet weather, a wet fall, grade spreads, and that could be interesting thing to look at. If you can be out there early, get good quality, maybe you will get paid for that this year. It's been a while, but that's something that I'm definitely watching. All right. Number 5, targets. Probably my favorite question right now is targets. Where would you target? Ryan, where would you target a wheat sale? Where would you target a canola sale? So this one, I split it into 2 because my target, depending on when you are going to want to generate the cash, my target's different. So when like a farm comes to me and says, hey, I need a target here. What are you aiming for to make a sale? Like if you said, Ryan, canola, what target will you put in on canola here to make a sale? Well, I'd come back at you and say, oh, well, we're trading 662 as of recording this podcast on the November contract. I'm going to target 690, 695, something like that, right? 692, I don't know, in there. But if you said, well, Ryan, I've got lots of cash flow. I got lots of movement here for fall. I'm good till Christmas. Like, what's your target then? Well, then my target's going to change. My target's going to say, well, hey, let's get to our harvest lows and then let's see where we go from there. Like maybe there's a 710 or 720 involved. Hey, maybe my target is 750 if it's late winter, right? I don't know. It changes. So when, I get that asked the question a lot at this time, and my response is, well, if you need to sell it in September or need the money in September, October, then there's no target. We're pricing it now. Like you might wait a day or you might wait a couple days for like a little bump here, but really there's no target. Like if you said, hey, Ryan, August 6th here, we're trading at 662. What's my target? I want to get this sold. Well, then I'm just targeting a 672, something like that. Maybe a 675, right? Tight target, like $8 a ton. What is that even worth it? Right? Is that even worth doing at that time? So that's, I love talking targets. I love talking about this, but when you have your markets are in a downtrend, spring wheat's in a downtrend, canola here, it's facing some pressure here right now. The target is no target if you need to generate the money for fall off combine, something like that. If you need the money next spring, totally different conversation. All right. Number 6, canola. Downside. Now, I'm hearing talk of some technical terms out there. I'm hearing head and shoulders pattern, something for us to monitor. I'm not smart enough to know what that is. I take the chart and I just draw a human and I'm like, that's the head and shoulders. Okay. I don't know what it all means. But downside targets here for fall. Is it going to get scary? I don't know. I know farms I've been chatting with in the Lunchbox crew are looking to get out of futures here. They shorted futures right around the 700 and they're looking to get out at 650, 645, something like that. Canola has traded as low as 580 in the last 6 months. And in order for that to happen, like I see, when I look at a chart, I see, 650 being 645, 650 being a level of support. I think, if you're sitting here sold at 700, then, taking profit at that 650 level, that would make sense to me. And then you might be prepared to short it again. But, if you're a farm, you're going to be long canola. So I'm probably holding that short until you're wanting to sell, right? Or make that sale. I had a great chat with a farm today, a little bit of old crop canola, left 60 ton. They had shorted the market, more than 60 ton, 400 ton short. And I said, well, why don't you just reduce your position to 17 contracts and, sell the 60 ton? Like you hedged yourself anyway, $1 higher than where we're at. just reduce it a little bit. Or I said, or keep it and protect more new crop. So it's a hedge. And I don't think you have to be in too big of a rush to get out of it. But yeah, 650. After that, just remember, folks, we have been as low as 580, but it's policy, biofuel stuff, China stuff, like that's what pushes the market lower. That stuff can still come out and happen. China will make an announcement at some point here on tariffs or on the anti-dumping stuff, right? So it can happen. I just think first level is around that 6.5, and then we'll see from there. I wouldn't be surprised to get a little canola recovery mid-August into September long weekend. Like that's pretty normal for that to happen, and then go make that harvest low. All right. Number 7. This is a topic I need to dive into, but I just saw like my local Bunge / Viterra in Melfort, Saskatchewan has a terrible canola basis. Absolute terrible canola basis. And I hope it's just new organization getting things figured out. But it came up in, higher CN, CP freight rates, kicking in August 1st. That came up as one of the reasons. And again, I haven't done any research on this yet. I'm going to look into it. But my comment on this is, if that is the case, if it was freight rates, then why did my wheat basis get better by $10 or $15 a ton, maybe even $20 a ton now at that same location? Again, maybe there's something in the background there, part of the basis calculation that's all been accounted for. But yeah, obviously freight rate definitely comes into play. Freight rates have been going up. It just, canola basis is terrible. And it came up like, hey, we need to fix our issue with trade. We need to fix our relationship with China. Like I totally agree with that. But we have exported a tremendous amount of canola seed this year. The talk out there is we're not going to have enough to export for this next year. So I don't know if that's it. I don't know if we need to fix our relationships 100%. We need to get our trade tariff stuff put to bed. We need support. We need strong voices from our government. We need to get a trade deal done with the U.S. But freight rates, I don't know if that's it on that canola in Melfort. Again, I'll try to dig into that. Number 8 here, big beautiful put. Again, I don't think that I don't think that the canola market is going to be your concern for this year. But the reason I brought it up is that you just can't screw up your canola marketing. Okay, we can't on our farm. Maybe I should just say that we can't screw up our canola marketing because we're not going to get the yields, this year that we want. We just didn't have the growing season for that. And so your canola marketing for many, it could be a specialty crop. It might not be canola for you. It could be a green lentil. It could be a durum. It could be whatever. Like you have your crop, malt barley. Like you have that crop that pays the bills on your farm. You got to spend some time and energy in that area to make sure you capture that margin. All right. Now the big beautiful puts, I've got a bunch running, and they aren't saving the farm quite yet, but they are. We get the statement here over the last couple of days, and that dollar figure is climbing, and that's just offsetting the unsold canola on the farm. That is our safety. I've referenced clients a lot this episode, but I had one client. They're like, "What's our average price on canola right now? Like, where are we at?" And this is a client I work with on a daily basis, basically. But I said, you don't have to worry about an average under $15 a bushel. Like even moving forward today, if it went to $10, like you're at 15, it was like 15.10 or something like that. Like that's where nothing can hurt you, and you have upside. You have upside yet on that. So, anyways, the puts are running. Yeah, I would just say there's still time to get some canola protection in. Yeah, again, I don't think the canola market is anyone's real scare. But if this head and shoulders pattern were to materialize and break down, and some of the numbers that were thrown around there was, canola going to 600, well, my 730, 720, 730, 740 puts look pretty darn good. in that scenario. So it wouldn't be a good situation if we lost our canola margin or any margin in your crop, that big crop for you. That just wouldn't be a good thing. You need that here for 2025. All right, number 9, lots of talk around these big US crops. They are big crops, all right? Like we'll get more crop tour stuff, but it's not in the bin yet. But the crop in the US is really darn good. I know people will post pictures of poor pollination or whatever it is. I'm not an agronomist, but they're good. Are they 187 of corn? I don't know, probably not. But these folks spend a lot of time and energy, and you look at the weather that they've received, and it sets up for that big crop in the US. So we can nitpick it a little bit. Is the number too high in the estimates? Maybe it is, but not by much. And could it get higher yet? It could, right? Those crops look pretty darn good. And the influence that you're seeing right now is that feed barley in southern Alberta has dropped $25 a ton over the last couple of weeks, something like that. But of course, you were alerted on the What the Futures podcast, so you took action and you're in good shape. So all good. And my last one here for my crop marketing rundown this week is oats. And I just wanted to give maybe a slow clap or a shout out to farmers in the Peace region. Your oat price up in the Peace is the same price as Central Alberta, and that never happens. And so for some reason, you've got some good export programs going on. It's a good sign. I saw oat prices rising across the prairies here a little bit. I've been neutral friendly towards oats. And as harvest, is around the corner, it's interesting to see those prices pop up. And of course, I heard about some quality concerns in the oat crop, so maybe that is the reason. So oat prices we're not too scared of right now, and they are showing signs of strength. All right, folks, that's my crop marketing rundown. I hope you enjoyed that for this episode. Now, if you have a crop marketing question, send it in. The mailbag has been quiet this summer, but I'm always happy to try to tackle your questions or bring in a friend, somebody smarter than me. I know a lot of people in the industry, and I can rely on them for some answers if I don't know how to respond. All right. So send them in, Ryan at whatthefuturespodcast.ca. Now, I want to put a little shout out here to John Deere as they just announced their 2026 combine lineup. And yeah, the future is here over at John Deere. We're talking about predictive ground speed control, automatic harvest settings, autonomous turning, and real-time grain sensing. Basically, a machine that thinks ahead, makes adjustments on the fly, and takes some of the mental load off your plate. I think I could even operate one of these. My brother will be happy to hear that. So I was thinking, if you've got young operators or you're stretched thin at harvest, this kind of automation, this kind of technology might save you some time and cut costs, especially when conditions are changing fast. Word on the street is that pre-orders are opening soon. And so I'm curious on who the early adopters will be and how this tech plays out in the real prairie conditions. So the brand new John Deere lineup, 2026 lineup out and available for pre-order shortly. All right, folks, let's go now to eating your veggies. Now I've got 3 written down for you this week. I want to put some lighter and cash flow review. Everyone has a different way to tackle this and maybe a different approach, but be proactive at this time of year. Like I beg you to be proactive. I've been begging you all summer to be proactive on cash flow review, but it's the worst phone call to get. Like for me as someone that works with farms, I hate this one. I hate this one where it's like, hey, I need X amount of dollars and I need it in 2 weeks. Like our advantage is out the window. We are at the mercy of what we can accomplish. And in the best case scenario, it's a hedgeable crop. We sell it, we re-own a portion of it on paper or through a strategy or something like that. But it's not good. It's never good. And, when you got elevators a little bit jammed up, you got maybe a bit of a glut, like it's not good. So just review it now. I got a message today saying, hey, Brian, I need to generate a little bit more money here by November 30th. Perfect. It's August 6th. I love talking about November 30th cash flow, and you should be as well. All right. Number 2, your bias, your market bias. You've got targets out. Maybe you have targets out. Maybe they haven't hit. If you need to make that sale, if that sale has to happen for a 0.1 cash flow, what are you waiting for? All right. What's your bias in these markets? I ask you to check your bias all the time. If it hasn't hit yet, if you threw a $9 wheat target out and it hasn't hit yet, what the heck? And you need to make the sale. What the heck are you waiting for? All right. Are you bullish to $9 wheat? Because Ryan said it's going to rain and harvest is going to be a bit of a struggle and quality spreads. Okay, well maybe, but yeah, like what's your bias? Because if you're trying to be bullish over the next couple months, seasonals tell you, history tells you that's not the right time. All right, so just check your bias and your timeline on when you need to generate that cash. Check those targets out. All right. And then the last one, I put canola protection in here. I know I said you guys aren't worried about it, but man, as I said that, I just came back and wrote it down because we really can't screw that one up. You really can't screw up your canola marketing. If you're one of those farms, 40%, 30, 40, 50% of your acres are canola. Maybe you farm in the northern part of the Prairie provinces. You can't screw that one up. All right. Screw that one up and it's going to be a lot of craft dinner this winter. All right. So spend some time on your canola marketing. All right, folks, that's it for episode 88 of the What the Futures podcast. I did save my positive moment for the end here. I want to congratulate my sister, Bridget, and her husband, Brady. They welcomed their first. Brinley arrived earlier this week. Baby girl, 5 pounds, 12 ounces, and came 3 weeks early. Everyone's doing fantastic. And yeah, so I want to give a congratulations to Bridget and Brady. It's been, a long time coming for them. And I'm just over the moon, overjoyed and excited to have a niece and see them as first-time parents. So congratulations to them. All right, folks, that's it for this week's episode. Thanks for hanging out with me. Next week, I got a little vacation plan. I'm doing pretty well on the vacation this year. We did a lot of camping. I'm going to do one more camping trip next week. So you probably get, with any luck, I'm going to be in a brewery sipping, some cold beer, recording episode 89. That fingers crossed. All right. We'll see what we pulled together for next week. But thanks for hanging out for the What the Futures podcast. My name is Ryan, and I'm out of here.